what are we doing to measure some of the retail investors maybe not buying the dip or using some of the big rallies to get out of this market?
Yeah, so there are lots of different ways to measure this, obviously. This JP Morgan report was really interesting, showing the fastest pace of exits from single stocks since March 2020. We've also been seeing some of that in terms of the flows from ETFs. It all sort of comes back to the fact that this market has been so volatile recently. I mean, looking at last week, the S&P falling about 3%, and then two really significant rallies on Monday and Tuesday, and then down slightly Wednesday and down slightly again today. And for retail investors especially, this is a big change from what they're used to, stocks going straight up during the pandemic. And a lot are getting scared and are not quite sure what to do.
Some of them, though, savvier than most, willing, perhaps more risk tolerant than most, are willing to short this market. And that's something you've been writing about a lot as well.
Yes, it's definitely a risky maneuver, but we've seen a lot of interest in taking short positions, either on single stocks. I've also seen some investors pile into inverse ETFs, which effectively deliver the inverse of a popular index. So, the inverse of the NASDAQ, or even 3 times the inverse of the NASDAQ. They're pretty dangerous tools, but some retail investors are turning to those. For professional investors, a lot of times this is a positive sign. When retail exits, that's sometimes seen as a sign that maybe the rally or the downfall is coming to an end soon.
Are you seeing that full-out, wash-out capitulation outside just the retail investor as well when you're looking at signals for this market?
Looking at this, it's definitely retail investors that are leading the exodus, but also seeing some professional investors as well. Outflows in ETFs, outflows from some of the single stock positions. So what everyone's looking at right now is what the Fed is going to do. A lot of this market, I think, is sentiment driven, based off of that, based off of the economic data. Tomorrow we get jobs data for last month, which is going to be a big thing to watch. So it's very much a knee-jerk reaction kind of market, and we're seeing these very big swings based off of whatever news comes in.